Some private lenders.
Like heavy privates or like mix?
It's mixed.
Mix. And like the CMI, Westboro.
Yeah, CMI is quite a bit.
And why? Because of the loan to values? Is that what you're looking for? You're looking for that 80%?
Yeah. But you know what? Not all clients need 80%. There are
Correct.
only few clients who wants to go up to 80%.
Correct.
But there are many which are like
Less.
if it's second, they're going 65, 70 is the most common.
Okay, there you go.
But there are few, yes, they like to go with 80, and then CMI is really good at that, I guess.
Right. So the reason why I ask is not because I'm trying to berate you. I'm just trying to understand how we can better our services. Right now, 80%. I'll explain why we don't go to 80%, but we're gonna get the whole rundown today.
I know right now most lenders are nervous about 80%.
The most nervous. We've been around for 40 years.
Understand.
We're an established company. We don't need to hit the extra 5% to make a deal work. We're just steady Eddie right now. Unfortunately, that's what it is. Vikas, we're waiting for you. You're good, my friend. Hello, Ethan. Nice to meet you. Danik, nice to meet you, my friend.
So let me tell you about my team
Let's
first.
hear it.
Okay, so Janakji, he's in this industry for almost 16 years, a senior mortgage broker with us. Vikasji, he's in this industry. She is a newcomer. Divya, more than 2 years. BB, more than 2 years, I would say.
Amazing.
Yeah.
Amazing.
And Ansh, he also joined almost 1 year ago.
Amazing. So it's a
And
mix of
Ethan-
new, experienced.
Exactly, it's a mix of experience, new ideas from these
I
new
love it.
people. From these people.
I love it. I've been in the industry for 2.5 years as well, so we're all kind of in the same boat.
Amazing.
I want to start by saying for the new guys out there, I will set up any presentation with you guys one-on-one, virtual Zoom meeting. We can get to know each other. I can help you guys out with sources or leads, not even for New Haven. Bankruptcies, trustees, and credit counseling services, builders, accountants during tax season, little things that you might not, maybe can just kind of get you going a little bit. Immigration lawyers for newcomers to Canada, little kind of leads that I always like to help out with. It's nothing to do with New Haven, just because I know being new is tough, especially in this industry. You got to work your ass off or else you're not going nowhere. All right. So that's what it is. So I'm definitely here to help you guys out. If you guys have any questions, by all means, all about the training. New Haven, we have been around for 40 years. Okay. I'm proud to join a family company, carrying on a family legacy. My father's been in the industry for 42 years. Him and his brother started it 42 years ago. And we currently have about 220 million under assets. 120 million of which are front and back end investors, and then the rest is syndicated banks that are now providing us lines of credit only as of the last year.
Mhm.
But the last 3 years is where we really showed our growth. Why? Introducing the good lender. Okay, it's time to know your lender. The private game used to be very different. For those of you that have been in the industry for a long time, the private game used to be a bounce check, used to be a form of revenue, POS whenever you possibly can. NSFs, the whole bit. That used to put a smile on management's face.
True.
Do you have any questions? Feel free to interrupt. I see you
No,
shaking your head.
No.
Okay. Also, if you guys don't interrupt me twice in this next hour, we're not doing any business together. I want you to interrupt me, get engaged, speak to me, ask me questions. That's what I'm here for, okay? It's not me just talking and taking control. I want you guys to really speak to me, ask questions. So we've been around for 40 odd years. We specialize in what's called equity-based lending. What does equity-based lending mean? No formal GDS or TDS, no formal income, no formal credit, okay? No formal GDS, TDS. So if you're telling me that your clients are unable to afford a payment, but their cousin's owner is able to help them out, that is okay with us. The GDS we don't look at. In terms of credit and income documents, we look for NOAs and credit bureaus. We take them, we put them away. What do we need them for? Title insurance, fraud and audit purposes. That's the only reason why we actually ask for the NOAs and for the credit bureaus. Okay, but the story needs to make sense. I'm not saying that if you guys have a client with a 480 beacon score, and you're telling me 75% and they're going to refi to a B lender next year, we all know this is not the case, right? This is just not happening. This is where the good lender comes in. We're here to set your client up for success. We don't want you to be in a 5-year vortex of private lending. We want you to be here for 6 months, 1 year, whatever it is. Life got in the way. We're your stepping stone. Get out to the B or A lenders.
Right.
We're starting to build this arm right now where upon exit, a lot of brokers actually leave their clients. We're trying to bring an arm to our company where we're actually going to bring them directly to the B lender because that's what I'm here to do. I'm here that if you have a client in the A field and you think that they might qualify, but they might not, tell me, I'll be your backup. If they don't get approved by the A bank, I'm okay if you shop us for the A. I would rather you go to a B or A bank. I don't want you to come to us, okay? That's true. Truthfully, I only want you to come to us if life got in the way and we're here to help you out. Okay. Please feel free to interrupt. I'm going to go based on our product a little bit more and what we do. We lend all across Ontario. Nothing outside of Ontario, no Quebec, no New Brunswick, none of that. Only Ontario based. We go all the way up to Thunder Bay and nothing and everything in between. Nothing west or nothing north of Thunder Bay. There's places in Ontario that I hear of every single day that I've never heard of before. It's pretty wild. So if you think that something is far-fetched, it might not be totally far-fetched for us. Maybe not at a higher loan to value, but you're talking about the Timmins, Ontario, the way out there. If you guys have ever heard, 55, 60%, we're looking to go out there. Again, you're not going to get the 70s or 75s. I'm going to be completely honest with you. I'm a straight shooter as it comes. The one thing that you're going to get about me, I'm 25 years old, just turned yesterday, 25. I am here to move out of my parents' home. With that being said, I have to answer your phone calls all in 15 to 20 minutes. You will not wait longer than half an hour when speaking to me. If you guys have an inquiry, you will not wait longer than half an hour. Call me whenever you guys want. I'll be on my phone till 8:30 during weekdays. Weekends, give me about 2 to 3 hours and I'll get back to you. My point is that my service is impeccable. That's the one thing that I pride myself on. If there's things that we can't control in this industry, like rates and values of homes, the one thing that I control is a good service. So that's one thing that you'll get. If you do submit a deal with us, I will be with you from start to end. I'm CC'd on every single email with my underwriters. If they don't answer you quick enough, I'm right involved. On closing, if you need help with doc, I'm there. Through and through, I'm there for every one of your deals, okay? So just know that. We close probably about 30, 35 deals a month right now. It's starting to pick back up. In the earlier months, it was a little bit slow, but my point is business is starting to go, and I hope it's starting to go for you guys as well. Let's start with the flexibility of our program. I like to kind of think of it as Subway or like a pizza shop where you can kind of build your own pizza or build your own sub. I really think that we're very customizable, very flexible at New Haven. Multiple different ways. As you can see here on the pricing matrix, you see the option 1 and option 2. There could be option 3 and option 4, whatever works for your client. The point is a mix and match. Is your client fee sensitive or rate sensitive? Is it a 6-month term where it doesn't make sense to do that 2% fee because that 2% fee is going to annualize to be a 4% fee? Or does it make sense to do the 1% fee for 6 months because that makes more sense for your client? It's less out of their pocket. Is it prepaid up to 60% fully prepaid, partial prepaid up to 65%? We do interest only as well as amortized up to 40 years for payments. We allow secondary financing behind us up into 90%. Let's be real. Nobody goes to 90%. It's all optics. It's all marketing. My point here is that if the client has 10% down of their own skin in the game, we're okay. We need them to have 10% down, if that makes sense. Do we have any questions about the 10% down rule? Newcomers, you guys are good with the new 10% down?
Let's have a question, then maybe.
Yes?
I don't know that.
Do you? If you don't, that's totally okay. We're here to learn.
Yeah, I didn't get this.
No. So pretty well is this. If you have a purchase price, let's say it's a new build in Toronto, okay? You purchased it 2 years ago. The purchase price is $500,000. 2 years later, we're looking at today, and the value is now worth $700,000. The max that we will lend is $450,000. Why? $450,000 divided by $500,000 is 90%. That means that they have 10% down of their own funds. That $50,000 is their own money. It's skin in the game is what we like to call it. It means that they actually have, it's not 100% leveraged. They're not just going to run away from it. You know what I mean? They'll have some investment into the property itself. Okay? So whether it's the flexibility, amortized payments, secondary mortgages behind us, I do lots of different terms that I like to go with. Listen, we do the classic 1-year open on 3-month penalty. I hate that one. Let's think about the story itself. Doesn't make sense. Are you looking to sell in 10 months? Let's do the first 6 months close, the second 6 months open on just 1 month penalty instead of 3. Or if you need a 6-month term, open on 1 month penalty. Or if you know that in month 4 or 5, they're for sure going to sell the property, we'll do the first 3 months close, the second 3 months fully open. My point is that we're here to customize anything. Everything is a case-by-case situation. If I'm going to be here and say that we have strict guidelines, we're not a common sense lender. It doesn't make sense. Every story is different. And if you've been in the industry for many years, you know how crazy some of these stories get, especially the ones that are going on today, how crazy they get. Different situations that we help with, property or borrower situations, bankruptcies, consumer proposals. Typically, lenders require 2 years of reestablished credit. We get involved right away. We are here to help power of sales. We are here to get involved in those right away, whether there's an eviction notice or not. We're here to help. Closing times. We can close probably about 5-6 business days. I need your ILR ready. I need an appraisal done within the last month from one of our approved appraisers. I'll send you right off the bat, and we're able to close in 5 or 6 days. What I see is what you see. I will send you the charge provisions right away. I'll send you a pricing matrix. Every time you ask me what the pricing is, I'm going to send you this exact. That was embarrassing. I'm going to send you this exact same document. This is what I see on my screen. This is what I'm going to send you. There's no bait and switch. There's no hidden agendas. It's time to know your lender, truthfully. Okay? At the end of the day, you'll realize that our service, and I'm not just saying this, is top notch. I'm not here to mention names about other mechs in the industry, but our back end is the cheapest in the game. Our front end, you can look at our prices. We probably rank a 5 out of 10 in terms of expensive. But our back end is nothing. We have a 1.25% fee on renewals for first, 2.5% for seconds. But all the discharge fees that you guys are seeing with these mech lenders, it's not what we do. I'll send you our charge provisions right away. You ask me for them. You want to know the back end, I'll send it to you right away. Okay, so you guys have everything right in your hand right from the get-go. You know everything. There's not going to be any hidden costs. That's one thing I've got to emphasize. Do we have any questions? I need one question here. Someone? Has anyone worked with New Haven yet?
So,
Yes, sir.
the deal to deal, like how much is cost for legal fees and
Good question.
admin charges?
Good question. So right on our front end, we have very few fees. We have a $695 account setup fee. We have $850 for lawyers plus HSD and disbursements for full transparency. That comes out to about $2,200, very much in line with the industry. And then besides that, we have a reimbursable deposit. This is to protect you guys and to protect us from the client shopping. For refinances, I believe it's $850. For purchases, it's $2,000.
Okay.
Again, this gets
For the
reimbursed.
refinance, how much for the refinance?
$850.
$850.
This gets reimbursed to you guys upon closing. It gets reimbursed to the client. It's just to protect them. Protect us.
You guys are working, like underwriter.
We're working. We got our lawyers going. We got everything. If you're going to walk away, we got to get paid something.
That's very important.
Very important.
Just
How-
like a retainer fees.
Exactly. And this has only been a new thing, retainer fees, because I feel like it's only started, people just started really shopping around, like really shop. But I respect the shopping. I think that if you guys don't shop, you're not doing your job. You want to be honest? Like, if that's why you don't tell me that the broker's not responding or the client's not responding to you. Like, I don't care. I'm happy if you're shopping. That's a good thing.
The biggest difference is when you go to Schedule A lender or banks, they can hold your rate for 120 days. They have a bigger appetite.
Us is 30.
When you go to the MIC and private lending, so in that case, holding 120 days funds, it's just like losing the interest. Losing the because
correct.
So in that case, if your closing is within 30 to 40 days, the retainer is definitely there,
Exactly.
right? Because they have to hold the funds. Exactly.
Exactly.
So, and we have to explain the customer accordingly, that they can understand that. Because sometimes we don't explain the customer why the retainer is a necessity, right? So they will understand very easily.
And they're going to get the money back, right?
Definitely.
I always say something, if a deal is 55, 58% loan to value, add $10,000 to the proceeds. We'll pay for the lawyer costs. We'll pay for the appraisal. Give it out of the client to start, and we'll pay them back upon proceeds. But I'm all one for the client. You're going to notice that.
Commitment.
It's just about, exactly, it's commitment.
Commitment.
If you're going to come with us, if you're going to submit the deal, if you're going to speak to our underwriters, just be truthful and honest.
Definitely.
Hey, we're waiting for an approval from CMI. If they can't go through, then we're going to go with you guys. But tell me why you're going to CMI. Is it the pricing? I can help you with that. I'm here to negotiate with our team. Nothing that you guys see here is strict. The $1 million loan amount, not strict. I did a $1.7 million deal yesterday. The $200,000 on second mortgage, we just closed a $400,000 one yesterday. Nothing is strict. It all just has to make sense with the story that you're telling. It all has to make sense for us as well for risk. That's that. How do we help you guys with your clients? We care about you guys as well, of course. It's not just all the client. I'm here to retain you and be your best friend. You can tell that I'm very outgoing. I love to talk to people, okay? For you guys, when you guys claim a broker fee, let's say you want to charge 2%, 3%, whatever it is. On our first page of our disclosure, it's going to say New Haven Mortgage charges a $10,000 placement fee, okay? That is both of our fees combined. On the 10th page of our disclosure, it's going to say New Haven Mortgage charges a $6,000 fee, and we are going to pay out Amit a $4,000 finder's fee for doing the deal. At the end of the day, he's telling us that he wants to get paid the $4,000, but we're going to collect the payments from the client, and we're going to pay you out what you tell us to pay. So you're not chasing the client. You're not hindering your relationship with the client. Oh, pay me, pay me, pay me. These are long-term relationships that you guys need to build. No one gets good with long-term relationships if you're just hustling them for money all the time. This. So that's where we kind of try to help to burden. We're still the bad guy at the end of the day, unfortunately, but we're going to be as good of the bad guys as we possibly can be.
So this percentage of what we are charging and we are asking you to add in the fee.
You got it.
Can that be more than what you are charging or?
Yes. It can be.
It can be.
It can be. It can.
If somebody paid.
There you go.
Sometimes the loan amount is very, very less.
I know.
So we need to have a minimum amount.
Minimum amount, of course.
If it's a $70,000 second mortgage and we're
Yeah.
only charging 3%, I don't expect you guys to go home with $800 and
Right, of course.
pay for one family dinner and that's it. No, I understand that. But when we're looking at, let's just say, an $800,000 mortgage, I have brokers asking me for 12% their brokerage fee. That's on top of our 10% rate and on top of, it's now a 27% mortgage, right? And now they're like, oh, we only want a 3-month term. So now it's automatically illegal for us to do. Because what it is for a 3-month term, if you annualize it, you have to annualize everything.
Yeah.
So that 3 months, 27% is actually 27% times 4, which you're looking at about 108% is what you're charging them.
Because lately you see the news of one of the gentlemen who used to sell the
Oliver the jewelers.
Yeah.
Oh, really?
Good.
That girl, that poor old lady
Yeah.
that he charged 65% interest.
Interest. You see that. so that-
65%.
His license is cancelled, right?
Yeah, you keep that in your mind.
Oliver, yeah, I think his brokerage license is cancelled, right?
Yeah, well, I would hope so. I would hope he's locked up.
He's back.
But do you have to specify how much you are charging and how much broker is charging? Or do you
So on our 10th page of our disclosure, it's going to say New Haven charges $6,000, and we are going to reward Amit with a $4,000 finder's fee. So yes, it is disclosed how much you're making, but again, it's us that's paying you, not you that's charging them. Does that make sense?
Yeah.
So that's the way that
So
it's
you
all
can-
optics.
Add the fee and the lender fee get paid, or you can separate letter of direction, you can do it.
Exactly. You can do it separately, but hey, if you want to maintain the relationship, we're happy to be the bad guy there.
Yes.
That's pretty much what I'm saying.
It's a matter of flexibility. basically. So,
Yeah.
If
What I
somebody
was
gives a
thinking
letter
is-
of direction, you guys need a copy that one too? or no?
That's a good question. That's more of I don't answer a question unless I know it 100%. I always write down the questions at the end. I'll get back to you guys with any answers, but I don't know the answer to that. If I'm gonna take my best guess, I think that if whatever is between you and the you and the client, we step back.
Okay.
We don't get involved in your relationship with the client. However, if you guys ask us to, if you want us to get on the phone with the client because they feel more secure talking to the lender, get me on the phone. I'm a level 2 agent as well. Get me on the phone. Okay? I'm very happy to help out. You tell me, is the food here you're saying?
No. One of the people she hasn't been able to get in.
I'm on the live stream.
If she's interested in alternate lending, you can tell her to not stress and I can always have a meeting with her afterwards. Okay?
Oh, yeah.
So, I just want to say to the new agents, basically, especially why we have to go, first of all, to a private lending,
There you go.
right? So, because private lending is basically to provide a solution, very customized solution that solution is not available anywhere else. Not with a trust company, not with the A lenders, right? So, and this is basically, I always think about the exit strategy, because that is very important for the.
That's the
private
only
lenders.
thing we care about.
It's just, these loans are not for 2 years or 3 years or 5 years. No.
Short term.
Short term.
Short term, if the customer is a little bit unhealthy in shape of
Financial health.
credit scores or in shape of income
Divorce,
requirement,
whatever it
any
could be.
reason.
Life
So
got
it's
in the
a
way. It's
temporary
life.
solution,
That happens.
Life
and,
happens.
and remember, this is your responsibility after this mortgage to take the customer to next step.
That's very important.
Yeah.
Then you're never gonna have a shortage of the money in your life if you
Correct.
keep doing it.
Correct.
Simple as that.
He's correct. You build the book.
So
You build
there's
the book.
an example for BB, there was a customer who was on default, the letter was issued with one of the Schedule A lender. We got him a private, so he paid off everything. After 1 year, we reestablished the customer's credit. He visited 3 times in this office. So now he got a credit card, almost 9-10 months old, all set up, scores are going to 650 plus. Now we coming to, got approved with a community trust, that is another trust company. So now next year, we're going to take him to an A lender.
Yeah.
So 3 years, you got 3 deals, and you're not doing anything wrong.
Please, thank you. Please, you're doing amazing. Keep it up.
You know, I was gonna explain because I have a same habit of you to explaining the things.
Yes.
So sometimes I can't stop myself.
I love that. No, I love it. Come here. I'm serious.
So that's the reason basically. You know, sometimes some things are click over there, what you're talking about.
Exactly.
So I'm just an addition of that.
And if I'm being quick, please interrupt me. I've said that over and over. Keep interrupting me, okay? I tend to go quick.
I have a question.
Yes,
What's
sir.
the response time?
Sorry,
How is the response time? So if we submit a deal,
my response time,
meaning your team's response time, if we submit a deal.
10
when-
minutes.
and
If it's 20 minutes, then you should think that I just got hit by a bus or something.
Okay.
Okay? Covered it.
And
Okay.
whenever you run the deal, be open, be whatever original the customer situation. And
We're gonna find it.
Their responsibility is to be find a way for you.
I'm telling you,
Of course.
we're gonna find,
Definitely.
if you guys are not being truthful, which I hope you're not, but if you are gonna choose that path, my team, one of them is an absolute genius. It's actually scary how smart this guy is. He sniffs everything from a mile away. He's gonna get it. He's gonna catch whatever you guys are doing. And listen, at the end of the day, we're here to help you. If you're gonna be honest with me, I'm so happy to give you guys price rate discounts. I'm so happy to guys give you interest rate discounts. Or maybe your client can't afford the retainer right now, and we will waive the retainer if they're really ready to go. If you work with me, I'm gonna work with you. I'm all about relationships, which is gonna lead me into my next topic of conversation, our new broker loyalty program that we just started. Ladies, you guys know Sephora by chance? Yes,
I
Sephora.
hope you added my name in that. I told you to add my name in that,
In which one?
in the.
I
The Sephora one?
did. Yeah, in the Sephora one. Hello, sir. How you doing today? So
Bring a chair, buddy.
we have a new point system. It's based off of Sephora's point system. If you guys, for every closed deal, you get 10 points. Okay, there we go. We got the eyes. You don't even know what the points mean yet. If you join, you get 20 points. Automatically, if you submit a deal and it closes and you sign up, you get 30 points. 50 points, you're now receiving a $500 gift card. Okay, so 2 more deals. At 6 deals closed, you're now receiving an $800 Air Canada gift card. All right, at 100 points, you now get $1,000 cash prize, whatever you guys want. My point is that we're here to breed relationships.
Yeah.
It's so much easier for you. It's so much easier for us. It's easier for everybody if we breed relationships. My goal is to be your best friend. That's pretty much it. Okay.
There is any cap for first mortgage?
$1 million is our soft maximum.
Somebody bought a property, 2.6 million.
Okay.
So he's going to put $1.6 million down payment.
That's
And he's selling his one more property. I think that's closing. They have a gap period around like 3 months.
okay.
So in a 3 month, if I can bring that client around like
You need a bridge loan. You're saying for 3 months.
yeah, something like that.
That's okay. We do 3-day bridge loans.
Okay.
What the prices you see here
Mhm.
are not the prices that you're gonna get.
Yes.
We're gonna make them far less.
Okay.
Why? Because we're not here to charge 2% over 3 months, which makes it now a 8% fee for the year.
Okay.
No. We'll probably do three quarters of a point if I had to guess. However, we need a firm close for the property that they're selling, right? We need to make sure it's a real bridge, not just they're gonna maybe purchase and
Right.
sell.
No,
It needs to be
he's-
firm.
he's selling
Exactly.
already, yeah.
So yeah, that's the definition of a no-brainer for us.
So there is you guys need he have a 15 property.
That's
There's
okay.
no issue.
No issue. We'll just take one of the properties to blanket, maybe not. Depends. That's okay with us.
More than like 50, 60.
That's what I'm saying. That's why we don't even need another property. But in the case that you wanted more money, let's just say, this is more of a lesson for everybody. In the case that this client did not have $1.6 million down, which most clients don't have $1.6 million to put down, and he needed 80%, we're not going to go 80%. Let's just say we were comfortable with 65.
65. Yeah.
He has 15 other properties. Now I'm just going to make up numbers. You have 2 properties, one worth $1 million, the other is worth $1 million. You need 800,000 against $1 million. We don't go to 80%. That's okay. If the second property is only 500,000 registered to the $1 million, we have 800,000 in liability, 500,000 in liability, 1.3 million divided by the values of 2 million. We're now looking at a 65% loan to value.
Collateral.
Yes. You don't get charged for the 80% pricing either. You get charged what the 65% pricing is. Okay, so that's our weighted loan to value. It's our bread and butter. It saves every single deal. If there's obviously collateral, but that didn't go. That was a no-brainer deal for us. Going back to our broker loyalty program, we have an awesome promo going on right now. It has literally created a lineup out the door to the point that I had to put my out of office on for 2 hours because I'm getting 20, 30 emails a day for it. 775 and a 1.75% lender fee, up to 65% in major urban or suburban areas on first mortgages. Max loan amount, this is a hard cutoff though, of 750,000. Why are we doing this? We pay our investors 8%. How are we giving out a rate of 775 with a 1.75% lender fee? I'm going to be honest, from a lender perspective, we have money sitting. The way that we make money is by money just churning. The more we lend, the more that we get discharged, the more that we lend, that's how we make our money. So we have a lot of money sitting. So we're giving out pretty much free money for the interest rate, and we're making money on the lender fee, is what's going on right now.
So
But-
whatever the special rate right now, like lending fees 1.25%. In case after 1 year the guy need to be a renewal, the same lending fee implement or
That's a good point. I think it's subject to new terms and new pricing. I'm not gonna sit here and say that 7.75 and 1 3/4, you got this guy with 480 beacon score that gets 5 years of this pricing. I don't think that's gonna happen, no. I think it's just subject to the end of May. So this promo goes until the end of May.
Okay.
Okay, so feel free to submit your
Until
deals.
when?
It goes to the end of May, but it doesn't have to close before the end of May. It just needs to be submitted. It can close in July, it can close in August, but it ends the end of May.
Okay.
Due to the numbers that are going on right now, I'm fighting to keep this promo alive and real because it is shown to be very successful. That's
How early we can close?
how quick can we close?
Yeah, quick.
5-6 business days. If the ILR is ready, you guys have a ready appraisal from our approved appraiser list, which I'll send to you right off the get-go. 5 to 6 business days is what we need.
5 to 6.
Yes. Okay. We're not your 24
Before
hour.
you're taking lower time, you give the date for 15 days, 20 days.
We will do that.
Yeah.
Like our commitment auto populates one month,
Mhm.
but we listen to what you guys need, and we're gonna obviously do our best to do
All
what
the
you
buying in the past, like quick close, so no, nothing for 1 month or something.
No,
They
no
want
1
to
month. We can if you need the 1 month, but we can do it in 5 to 6 days.
How do we submit the biologics or?
Biologics, velocity,
or-
okay, yeah, whatever you guys need, submit it to. Believe me, this is not the way that we're not gonna do deals, is because of a submission portal. But it's not working, I'll manually do it for half an hour myself, doesn't matter. Okay? Do we have any other questions about different property types, borrow profiles, new immigrants to Canada, we work with right away?
Okay, so one
Okay,
question.
can you talk about those?
Yes, there's not really much to talk about there. It's just new immigrants to Canada, we will help right away. If they're outside, like I know that ban that's going on right now that people can't purchase if they're not a Canadian resident, correct? But for new residents to Canada, if they're here, they want to refinance, they're trying to get on their feet, they don't have a credit score yet, they're a beacon reject with 0 and they just moved to Canada, we're here to help out. Okay, so we're gonna help those that are here to help out.
So we need to have minimum 25% down, basically, for first mortgage.
Yeah, right, so that's it.
Okay, so this 75 LTV that you have, loan to value, so does it differ with the type of property if it is detached home or
Of
a
course.
condominium?
Of course.
For the condominium, what max?
Condo, we're going to 70%. And I want to be very clear with something. This is more education than open in a 300-unit building. It makes no sense. The saturation of these buildings right now are crazy. So as Vikas was saying earlier, our lender parameter, we need an exit strategy. Without an exit strategy, we're lifeless, right? Because that's what we need. We need a way for you guys to get out of our mortgage, make their payments. That's what we have to think, is that your client's not going to make their payments. We're going to have to take over the home. If we take over the home, now we're just one of 80 units. So that's why we scale back to 70%. Why do we scale back to 70%? Because then another lender is able to refinance out. That's now our exit strategy. Okay, so 70% on condos, 75% on
Any other?
for rentals. This is another learning opportunity for everyone. That all the deals that are in power of sale for us right now are all rentals. Why? Because renters can sit on their ass and not move, and they have rights,
Yep.
and they don't have to do anything.
If
We
you
have-
want to invest, then Ontario is not the
Right.
lender-friendly area. at
There
all.
you go. So we have deals that we were supposed to be paid out 14 months ago, and we can't do anything because there's a renter that's just refusing to leave. And how do we get a renter to leave? Money. Give them 25 grand, they might leave. You know what I mean?
Yeah.
But that's where now we only go to 65% on rentals. Okay? Because we need to have a refinance. This is where you have the owner occupied property coming as collateral. Now we're able to lend above our 65% guideline. Okay? So that's something that I just want to food for. Ask you guys stupid questions sometimes that you might think are stupid. Do you have another property, or will a second lender go behind you? I don't just mean to kind of patronize and make you guys sound stupid. I'm trying to find any shot in the dark to make the deal work. Okay? I hate to say no.
So small commercials are, if some office space,
Yeah, 65% is our max on
750 square feet or something like that, is good, 65%. And I will send you one deal today, just quote
Beautiful.
me here accordingly.
Yep.
So I will let you know that.
So as you can see, thank you you've led me into a few conversations now. Very transparent. On our bottom here, you'll say a 1% premium is applied to the following: mortgage arrears, power of sale, properties on well and septic, and lands or small commercial or industrial properties. This is where we add 1% to the lender fee and not to the rate. But remember, we can mix and match the lender fee. So although it could be 874 and 3, we can make it 974 and 2. Okay? 1074 and 1, 774 and 4. Whatever you guys want, as long as the cost of capital is there for us.
Yeah,
Do you know development?
Big land?
Yeah,
No.
big land.
We are residential infill land only. You got a house, you got land, you got a house. Major urban area, we'll lend on that home. But by no means, if you guys want to start construction, you got to pay us out. We don't do anything construction oriented, nothing big commercial. We stay away from big commercial, construction, and big land parcels. We don't like those. Those are the three things that we do not do. Okay? But if, for example, why would someone need to come to us to lend on the land if you guys can't do construction? Well, let's just say you need some soft costs. You need the permits. You need time. You need 5 months of time to just wait, or to wait for certain approvals to come in. That's where we'll be there to help. And we can be there for that gap, if that makes sense. But by no means that if you guys are gonna start construction, we need to be paid out.
I have a question.
Yes, I love all the questions. Thank you.
If I have a client who has a house,
Yes.
and who has a big backyard, and he wants to install another tiny home, he doesn't want to construct, but he wants to install.
That's a very good question.
Yeah,
I
so-
would ask my underwriter.
Yeah, can you make a product also? Can you lend for that?
I wouldn't be shocked if we said yes. The thing that we do though is we value our homes on the house plus 5 acres and no outbuildings.
No?
No outbuildings,
Okay.
as you were just saying, an outbuilding, right? So let's just say it was a hobby farm and you have a big barn.
Yeah.
We just value the home off the house plus 5 acres.
Not the-
No outbuildings. We get rid of the value of the barn.
Okay.
Okay? So that's how we do our value like that.
Ethon is a new thing. He's talking about, we know a manufacturer who made a 1-bedroom houses.
Okay.
Put in the backyard.
Interesting. Never heard of that.
Little home.
Yeah.
Tiny homes.
Tiny
I
homes.
like that.
Yeah. it is,
Pre-constructed, prefabricated tiny home.
Yeah.
Yes, and they get a permit from the city.
Yep.
And they install it.
That's the key. Permit from the city. If it's legal, that's totally okay.
Yeah, it's legal. It's totally legal. And from the city permit, electrical permits, and all plumbing permits, and everything.
Beautiful.
Turnkey operation, then you can rent it out for 1,500, 2,000, whichever the
Beautiful.
location you are.
Yes.
So I was working on a couple of files. The only for the and rest of the 50% basically, yes, it's a lien against the property, but you can make it 2 years, 3 years, or something like that of payments, because that is the future is coming here.
That is interesting. I'm gonna be honest. I don't know the answer to you.
I asked a couple of them actually.
This is behind the scene.
Yeah.
I'll ask them. Okay.
Can
And
you-
I can get you the answer for that.
Yeah.
Why? Because this is a live
we
deal.
can-
I assume.
We can share more details with you about that.
Yeah.
Then you can-
100%. 100%.
City of Brampton giving permit these days. You're gonna be putting them fabricated 1-bedroom, 2-bedroom.
That's awesome.
Yeah.
Homes in there, yeah.
That's awesome. I never heard about that before.
Rental crisis.
Kind of going on that same topic, lease land. Unfortunately, we stay away from. Only 2 months ago did we stop doing lease land. Why? Title insurance.
Yeah.
Nobody approves it. Nobody. So what are we gonna do? Like, it's not our choice. We're upset that we can't, but what are we gonna do? No one approves it, so we're not insured. So how are we gonna lend?
One of my client, he have a 2-story home
Okay.
in Toronto. So he get approval for make a 3 level now. The basement is illegal. First floor is going to make apartment legal, and the third one also is apartment.
Let's call it a triplex.
Yeah, something like that. So he need a money to do like a renovation for that home,
How much renovations are we talking?
around 150K.
That's not so bad. We'll ask for contractor quotes, and we'll probably do holdbacks. And as you guys show us the contractor quote, we'll release the money.
So how you taking that property as a residential or commercial?
So anything this is actually legally, like based on just law, if it's 5-plex or more, it's now considered commercial.
Okay.
If it's a 4-plex or less, it's still residential.
Okay.
Which you guys are perfectly leading me to my next conversation. Rooming houses. No.
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 Student houses. Yes.
Yes.
Okay? Rooming houses and student houses, people think are the same thing.
Mhm.
A rooming house could be 7 deadbeats up in Sault Ste. Marie that live in a rental. No. But if you got a 6-person home, I just graduated university a couple years ago from Queens, every single one of these homes are like filled with kids and they're lined up for the next year. And then the marketability is off the charts for these student homes. So if you guys are in a walking distance in Waterloo and Kitchener and McMaster University, all these Hamilton, right? That's okay for us. But the second that you say a 4-plex or a 5-plex, that's now just rooming houses. That's where we stay away from. Okay. Our max doors for actual rentals is 4 units, 4 rentals. That's per our offering memorandum for those that don't know what an offer memorandum are, for our investors, we say this, hey guys, we're only gonna lend on this, this, and this. Are you okay with this? And they say yes, and they sign off. On our offering memorandum, it says we can only do a max of 4 plexes, 3 plexes, 2 plexes. Because now when you get to 5 plexes, it becomes commercialized, becomes a lot more different. You've got commercial appraisals. It's a lot different. You go about them a lot different. So 4 plexes are max for rentals.
I have a,
Just want to
What?
know, what's the difference between rooming housing and student? Like, I'm not quite clear.
So rooming house and student home. In Sault Ste. Marie, is there a university there that's well known? And are there students living there? If there's students living there, maybe they're all online students, and then my team will do a little bit of background search, you know what I mean? But my point is that if it's like a 6-plex in London, Ontario, beside Western University, this is like the creme de la creme of marketing, because there's students living in it, right? And they churn and they churn and they churn, and the next year there's gonna be another set of students, and it goes on and on and on, because there's students there. They keep coming to, it's marketable. But these rooming houses are not marketable.
and mostly student housing are registered with the city also,
Yeah.
basically. That's why you go Waterloo, you have a house, maybe 5 bedrooms.
Right.
So 5 people living in there. or
That's okay.
6 bedrooms, 6 people living there, but registered with the city. And by law, whatever the city by law is.
They are following
is
it.
followed, and it's insured accordingly.
I lived in a house with 7 people.
This is also rooming house?
No.
Or they have a permit?
Yeah, there you go. Rooming house with a permit. Put it that way.
Student house. Yeah.
Student house. So I lived with 7 people. It's the most marketable thing in the world.
Yeah.
So technically, it's the same property.
It's the same property. It's just the way that people word it. So when people say, "Oh, can you lend on this rooming house?" I ask you right away, "Is it students? Where's it located?" And then they say London. I'm like, "Okay, it's a student house." You know, it depends on the location. If it's a student, if it's near a university, right? Then it's good, very marketable.
Yeah,
So
otherwise.
even if it doesn't have the student permit, you can still call it a student house.
Yeah, totally.
Yeah.
Right? Just as long as there's students living in it. And again, this is all just let's be honest to each other, right?
75 or 65?
How many kilometers
65.
cover?
Rental.
60?
Rental, 65-ish.
How many kilometers cover is student home or like
From university.
rooming home from the university?
So it depends, right? Because London, Ontario, I know that where all the students
For
live.
example, there is a York University, okay?
Yeah.
That one right on Steel Avenue.
Yeah.
Somebody have a house in Steel and Kipling, so he said, "This is my student home. You guys consider?"
Yes, totally. If you're telling me that,
But the
listen,
LTV is 65.
but it scales back a little bit. Why? Because it's not the most marketable student home, right? Only because these guys decide to live 20 minutes away from the university. Doesn't mean everyone's going to decide to live 20 minutes away from the, right? But so yeah, it can be a student housing. We can look at it, but the marketability is going to come back. It's the same idea for cottages. We love our cottages. I don't know why. I couldn't tell you why, but we love our cottages. Okay, but we even lend on island cottages where they have no road access, only boat access. We lend on cottages, but not at the same loan to value as one that you can just drive into your driveway.
Yeah.
Because how many people are going to line up for an island cottage versus how many people are going to line up for a cottage that you can just drive right in? It all just depends on the marketability that it poses, right? That's
Usually on a 3-season or 4-season cottage, what's the loan to value?
So you're talking the Hot Lakes, you're talking the Muskokas, the
Muskoka,
Kawarthas, 70%. We'll go. Waterfront cottages, we love them.
70%.
I'm gonna be honest with you guys.
Yeah,
As I was
so-
saying earlier, before you were,
Yeah.
because you weren't here earlier,
Yeah.
we've been around for 42 years. We're a very established company. We have $220 million under management. Right now in this economy is not the time that we're here to hit the home run.
Yeah.
We're not here to push ourselves to go to 75% to make ourselves feel uncomfortable.
Right,
I'm
that's
being
right.
honest with you. So I don't want you to think that, a 75% refi in Toronto is not necessarily a home run for us. Maybe in 6 months it will be, when we can loosen the gates a little bit and our arrears are down a little bit. Maybe yes. But for now, I'm being honest with you guys. We don't do 80. 75% is few and far between, but I'll get you the best service and the best, hopefully, terms and prices for the lower loan to value deals. 68%, 70% lower. These are what we are specializing in right now. I hope it changes, but right now, last year, for example, or 2 years ago, before the whole crazy stuff happened, we had second mortgages up to 75%, 999 with a 0% lender fee. You remember those? Like you remember those times? I would say, hey, what's your name? Ethan. Okay, submit your deal. You know what I mean? That's it. I wouldn't even look at it. Now things have changed. We used to be true equity lenders. If you have a heartbeat, come. Now it's changed. I'm being honest. That's what I'm here to do, is be honest.
That's the business policy change according to.
That's what it is. Hopefully, in some time from now, we'll be able to extend these
Actually,
Gates a little
broker
bit.
have a responsibility to save our lender, you know. If the lender is safe, then we make the money.
Right?
If the lender's money is gone, how
Then
can
what
we
are
make
you guys
money?
gonna make money?
Yeah.
The same way that I'm coming to you guys to win you guys over is the same way that you need me. It's a symbiotic relationship. It's
So, just thinking, reason, I mean, currently, the scenario is like, most of the builder purchases are, the clients are struggling to close it. And almost all of the time, the LTV that they're looking for is 80%,
yes.
okay?
How do we go about this?
Yeah,
Okay, so I explained a little bit earlier. It's actually a good one to explain again. Let's say the property is purchased for $500,000 three years ago. Okay, we will lend a maximum of $450,000, assuming that this equates to 75% or less of the appraised value. Why? So $450,000. Let's say the value is now $650. That's about 73 odd percent. We will lend that much because the purchase price was 500. We'll lend a maximum of 450. It means that the client has 10% money of their own funds. So we'll lend 90% of the purchase price as long as it equates to 75% or less of the appraised value, or the lesser of both. Unfortunately, if the appraised value comes in less than the purchase price, we lend on the appraised value. Okay? I want to show you guys something. I don't really show this often, but I'm going to show it because I think it's important for understanding, especially for the new guys in here. What I do a little bit of junior underwriting. Nothing crazy. The real underwriting goes, it's because I don't want to waste your time. When you send me a deal, I'm not going to say yes, and then my underwriter is going to say no 2 days later. Of course, this sometimes happens. But when a deal comes to me, there's a 70% chance. If I say yes, there's a 70% chance that it closes. You think I'm making up that number? We have stats. I track every time that you email me, I track it every single time. We have stats, we have numbers, because we have to improve our efficiency levels. We have to make sure that our service for the brokers is up there and top notch, and we're not wasting your time. So this is what I do, and I'm going to show you what I do. One
You
second.
want to connect it to the TV?
Yeah, if you don't mind, why not? You have the HDMI cord handy, or is it? How do I go about it?
Maybe if you have screenplay, do you have screenplay?
Oh, I don't think this is an Apple, but I can honestly, if it's too much, don't worry about it. Don't worry about it. I'm just
Give you 1 minute.
okay. Okay. Is this like the awkward silence now that we wait the 1 minute, or how do we go about this? Do I continue without her, or
She probably has one.
So what the second mortgage?
second mortgage?
So what was the 750 is the max for first mortgage?
Million.
No, he's saying that if we're going in second position, the first mortgage registered amount cannot exceed 750,000.
Okay, then 250 will be million, right?
What do you mean?
So like 250 is the maximum amount, right?
No.
It's very a soft maximum. Okay, so it says that our maximum mortgage amount on second mortgages is 200,000. I did a 400,000 one yesterday. Okay, so that was double. So don't look at the maximums really. The existing first mortgage cannot exceed 750,000 if we're lending behind it. Why? Because it's too much stress on the client's shoulders to now pay these really high payments and then pay us.
But what if the property value is, let's say, 2 million and he has 750? Then
Talk to me. Again, as I was saying earlier, I'm 25, just turned 25 yesterday. I'm trying to move out of my parents' home. The only way to do that is to answer you in 10 minutes,
Belated
okay?
Happy birthday to you.
Thank you. I appreciate that. But my way is to answer you in 10 minutes. You call me at 8 o'clock on a weekday, weekends, I'll answer you. Seriously. Weekends give me 2 to 3 hours. Weekdays, I'll get you till 8:30. You're not going to have a problem speaking to me, okay? I'm always on my phone.
It's a little short, you meant.
Oh,
to
you're
comment,
awesome.
but yeah.
I thought you just called me short.
No.
This question about, I
Thank you
have
so
a
much.
question about newcomers to Canada.
Yes, sir.
So what are the details basically about that?
I'm going to be honest. That's one of the products that we have that I don't know 100% about. I do know. I know that we accept beacon rejects. I know that we accept newcomers to Canada, treat them like they're Canadian citizens. If they need to be established to start for 6 months or 1 year, we're here to establish them until you get them credit cards, until you get the bank accounts. We're okay to help them, right? As long as we have the property as collateral.
All right. Another question I have about the down payment.
Yes, sir.
And
You're leading me into my. You're amazing.
I-
No, you're good. No, it's perfect. Go ask the question.
so the down payment mostly, it's 30 days, 60 days, 90 days statement.
Okay.
Or the gift, how the gift can,
Yep.
we can show and all these things. Because there is also an email associated to it. So how we can be, fit in the policies basically.
So I'm sure. Oh, I thought it was on the screen. I was like, acting like I was the smart guy by highlighting it, but there's nothing behind me. If you go to the input, and I believe it's HDMI.
Yeah, I don't know which number, but you might need to.
Four?
I put on the bottom one.
Which one?
Go to
Can you
input. All right, here you go.
Beautiful. Look at that beautiful matrix or risk
There you
assessment.
go.
There you go. Okay. So this is what I look at. Feel free to take photos, whatever you guys want to do. I don't care. We have two different quadrants. We're equity-based lenders. Quadrant 1 holds 75% of the weight. Quadrant 2 holds 25% of the weight. Quadrant 1 is based on the property. Quadrant 2 is based on the client itself. Here you got quadrant 1. This is what I'm going to do my risk assessment when you send me a deal. The first thing I look at the geographical area. Where is it located? Toronto pretty much is the only place to score one that has 500 square kilometers. It's very straightforward. I put a number in there. What's the population? The most straightforward. We all go from StatsCan. That's what I do, okay? The state of repair. Is it minor deferred maintenance? Is it in good state of repair? Is it a new build, right? Then I rank it that way. Next is days on market. This goes all to that marketability that we were just talking about. If you have two cottages that are on the same lake, but one is a drive-in and one is an island property, the days on market for the island properties could be 200, 300, 400 days. It's crazy how much some of these properties sit for. Why do we look at the days on market? Because if your client doesn't make their payments and we have to take over the house, how long are we going to have this property for? We need an exit strategy, right? Then what's the property type? Single family home, da 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 da. This is, I fill this out for if it's a collateral property, if there's another property that we use. Moving on to quadrant 2. What's their income type? Payments from government, salary income, business for self, commission, or rental income. Payments from government are guaranteed. You know that they're going to happen. OAS, pension, there's a guarantee that they're going to pay you, right? Salaried income, obviously much more stable. It's very stable, but of course people get laid off. It's the world that we live in. That gets a 0.75. Business for self, commission, rental income, a little bit more unsteady, but still income, of course. I want to make something very clear. Just because you tell me a salary income when it's really business for self, that quarter point right there is not going to make the difference of us lending on the deal or not. It all just brings together one big story is what it does.
Right.
Credit score, very simple here. What's the credit score? We subtract factors for collections, judgments, mortgage arrears, inquiries with other mix, because sometimes we open up a credit bureau and they have 7 other inquiries with other mix. They went already to Pono, they went to CMI already, they went to Lenderific, I'm thinking to myself, why are all these people denying this guy? How am I looking at a 60% Toronto deal and all 5 of these people denied it? You know what I mean? There must be something up. Right. So something must be up. We don't know though. Story and exit. What's the story? Does it make sense? Don't just give me a refi to B lender when it's a 480. I'm going to give you a 0 credit score, right? Give me a real story. If it makes sense, it makes sense. If it doesn't, it doesn't. But it all adds to the story. My point being is that if you guys have a great income client with a 480 beacon score and they got a great exit strategy to refinance out, the beacon score doesn't really matter. It gets washed away by the good other variables. You know what I mean? What's their affordability? This is the good lender. This is where we set your client up for success. I'm not just going to give you a $400,000 second mortgage to 70% in Toronto because that's what the client needs. If their affordability is 95% and they bring in $10,000 of income every single month and they only let out, and they're now paying $9,500, are they not eating for the month? What's happening? Right? Like we need to make sure that they're able to afford the mortgage that we're putting them into. And finally, skin in the game, that word that I always say. It's different for purchases, it's different for refinances. How long have you lived in your home for?
3 years.
3 years. So you haven't raised, I guess, your kids in that home, let's just say. But let's just say you did, and you were living there for 12 years. You're going to be much more scratch and claw to keep that home that you've lived for your whole life with your memories than maybe a rental that you just bought a year ago. You'll let go of that rental very easily. But that home that you raised your kids in, it's going to take a lot for you to let go of that home.
Attachment.
You got an attachment, skin in the game, pride of home ownership. And finally, for purchases, as you were just bringing up, 20% or cash is the down payment, is the minimum 10% cash or gift, 10% cash plus equity, 10% cash plus a second or VTB. How are we financing this deal? Cottages, as you can see, it literally has its own tab. We love it so much. Is it a hotspot, a non-hotspot? Very simple, access to amenities, state of repair, days on market, and the cottage property type, okay? And then that pretty much gets you a ledger that I go into myself, put in the loan amount, whatever it is, see how much the shortfall is, so we don't go through the whole process and then our underwriter says, by the way, there's a $25,000 shortfall. I'm gonna know this right off the bat before I even speak to you, okay? Before I even approve. And then finally, you now got your limits, where I go commercial, regular, cottage, condo, vacant land, rental. It tells me the loan to value that we're willing to go on the deal. Of course, this is a give or take. If you're asking for a 65%, I'm not going to say no, we'll do 62.5. That doesn't make sense. It has to be a common sense approach. Is it in the right ballpark?
Yeah.
That's pretty much that for the risk assessment.
That's very insightful.
Right? That's like
Of
an
course,
it's like an awesome tool that I don't have to go all these variables in my head. I can put it here and it gives me a loan to value.
Yeah.
I'm not allowed to send it because it doesn't have our licensing number and everything on it. Everything I send out has to have licensing numbers. But if you ever want to go on a Zoom, you want to go through it again, you want to take some notes on it, by all means, come on a Zoom with me. We'll go through it together. I'll share my screen, do what you guys want to do. But this is what I look at. This is what I send to my team. Okay? Thank you so much.
No problem.
I appreciate you. I guess at this
I
point,
never try to ask more and more customer to the question, more question to the customer, sorry. Doesn't matter in what situation they are.
correct.
They're in the bad shape, good shape, what is the bad shape happen, why you're in trouble? Ask all these things basically, because that helps to underwriting.
And if they're not willing to work with
Because we
you,
are not judging them for their personal situation, we are just trying to get
Into to bring them out.
Exactly.
Exit
exactly.
strategy not only for them, for us as well.
We all think that we are not a victim to life.
We have to keep
Life
that
gets in the
customer
way.
healthy, you know?
Life gets in the way. It's just reality. That's just what it is. Yes, sir.
Can you go as far as Stamford in the east?
Where are we talking?
Google.
What's it called?
Can you type in this address 462?
Yeah.
ADAIR. D is in.
ADAR
ADAIR
AIR.
Road.
And where?
It's very close to Tamworth.
Oh, I just realized I don't have Wi-Fi. Do you guys have a connection handy or is it?
Yeah, it's just Dream Home with a capital D, 123.
Nice and easy. Is she the technician girl or is she?
She's all around her head.
She knows
Do
everything.
everything.
And what is the city?
This is very close to Napanee, just before King City.
I'll just go with it will come in. This, I assume this,
You want to, yeah.
I got it here. That's what I do.
So this is about 2.5 hours away from here.
2.5 hours away from here, if I'm gonna be completely honest with you. Now why don't we do this? This is perfect. This is a perfect learning exercise. Okay?
Great.
Perfect learning exercise. I'm gonna tell you right off the bat, this is a remote property.
Yeah.
There's not gonna be lots of people around. This might not be our forte.
Yeah.
I can guarantee the population is gonna be under 10K. Okay? Is the property well maintained? This is very important for us.
This guy, he wants to keep the remaining stuff, keep the structure with himself. And he wants to do cosmetic changes. So what he's gonna do, he's gonna tear down, it's a retirement house. So he's gonna tear down everything and he wants to.
It's a retirement home? Oh, it's his retirement home.
So
Okay.
he wants to, so it's a building, so it's a retirement home building. He wants to deconstruct it and then the structure will be the same. And then he has to convert it into a.
I'm gonna tell you why I don't think that we're gonna go on this.
house. Okay.
Why? Because now we're looking at minor deferred maintenance or significant deferred maintenance.
Mhm.
Let's say it's a 0.5 here. I can probably tell you that the days over market here is going to be 90 to 180, around that range. You're not going to get better than that, right? And all of a sudden, we're looking at a single family home. It's a 1.75. Our limits here, or it doesn't actually show it. If this is not greater than a 2.5,
Uh-huh.
it's a pass.
Okay.
If the second quadrant is less than a 2.5, we can work with it because it's the client. We're not here to judge the client. We're here to help the client. But if the first quadrant is under a 2.5, it's just not in our cup of tea. It's just not our cup of tea. Okay. So there's an answer where we say no. I'm happy that I'm saying no today, not just yes, right? Because no one wants to get out here with some false hope and that's it. But that's what I do, right? And you can see here that all the stats are from StatsCan. So, right, so everything that I'm looking at is just based off all information that you guys have
That's
access to,
amazing information you provided.
right? True.
None of the private lender yet, never explained that how we.
I'm trying to, so you guys
you know,
understand.
So this is amazing information
Yes,
for
yeah,
everyone
yes.
here.
This is
Right.
this will
Setting
actually
consensus.
bring acceptance to us as well when we hear a no.
Right.
So we know why it is a no.
Because mo-
I'm going to tell you a reason every single time. You're going to get a paragraph from me. I'm not just going to say, no, we're going to go to 65. I'm going to tell you why, right? So I had a deal yesterday, for example. A client had a $300,000 first with RFA. They requested a $400,000 second from us, $700,000. The property's at Young and Shepherd, and it's a $1 million property, condo. That's 70%. I said to the client, hey, when I plug your stuff into my assessment, you're looking at a 92% affordability. That's where I got the example from actually 5 minutes ago. You are making $10,000 a month in your OAS, your pension, and your savings. but you're spending 9,200. Are you not eating? What's going on here? You're at a 92% loan to value. So what I'm thinking of doing here, your exit strategy is to sell your property in 6 months. The reason why you need the the reason for the funds of the $400,000 second, $250 was to pay out an existing second, and they needed $150,000 to pay out the family member. Okay, that's totally okay with us. I said to them this: hey, instead of giving you the whole 150,000, I'm just going to give you 100,000 right now. The 100,000 is going to now bring us to our 65% loan to value bracket instead of 70. So you're going to save 1% on the rate and a quarter point on the fee, 125 basis points. So it's cheaper for you. And you can pay back your client, the client can pay back their family member $100,000 now. And because you told me that your exit strategy is to sell the property in 6 months, once you sell, then you can pay out the $50,000 to your client. What am I doing here? I'm looking out for the client. I'm not just trying to be annoying and say, we're going to go to 65%. I'm trying to save you guys thousands of dollars in fees and rates to just pay them back later. Pay back the majority now, pay them back later. My point is I try to come up with creative solutions that work. Don't think that when I'm just scaling back, I'm just scaling back. I'm going to explain to you everything. That's what I'm here to do.
And there's a myth about the private that
Anything, everybody will get the money. Yeah.
The future is coming.
It is.
We definitely dealing regular basis with that.
We were the past, and now we're the future. Same thing.
The future,
And actually, we have to keep this private more healthier. The reason is that more they will be turned around, more is small lenders can grow. It is more they will be stronger, and more they can offer you a better rates and fee wise, basically.
You're right.
Because there's always a competition in there, right?
It's so saturated. I wish I could move out to Florida or move out to the east, and I don't have no competition.
Mindset need to be changed, and the privates are definitely.
I worked here 2 years ago. I did nothing of this. Everything I'm showing you today, I did nothing of 2 years ago. Sorry. Now I'm doing everything of it. Every deal that I look at now takes me 30, 40 minutes to look at. But again, you guys are not going to wait for me for response times and whatnot. It's going to be quick. I'm your friend now, okay? Pretty well. I now have, because of this broker loyalty program and whatnot, I have a few brokers that have closed 6 or 7 deals with me already this year because they just love the way that we work. It's just simple. It's easy. We care about your client. It's not the same that we used to be 5 years ago. I told you that I'm part of a family company. I used to run around this office when I was 15 years old. I used to run around the office when I was 9 years old. I've seen the company change firsthand, like so much. It's actually crazy. So that's something that unfortunately you got to be a level 2. The reason why is because we can't be promoting points and cash for level 1 agents when we're not able to work with them. But let me tell you one thing: if you're a level 1 agent, which I assume you are, if you wanted to work with me, all you have to do is get Amit to submit the deal, and then I can talk to you directly. Okay? But he just has to be the submitting agent. That's it. Your broker, your investor, borrower, brokers, resources, approved appraisers. Doesn't get easier than this. You got a little heat map. Where do you want to go? You want to go Eastern Ontario, Ottawa, Kingston, Pembroke? Cool. There's your approved appraisers right there for you. Don't have to call me. You can. Happy to send it to you. If you want to talk to me, say hello, sure. But whatever you guys want. Resources, loyalty program. This is where I was just talking to you guys. So easy to sign up. Name, email, phone number, license number, brokerage. That's it. Here's what we're talking about now. So when you get 6 closed deals for us for a year, not only do you get 3 times the points per deal now, every deal you close, you get 30 points. Every deal you close, you get 30 points. You also get a $500 cash bonus. Buy 6 deals already, you're already going to have 60 to 80 points. Plus you're down 3 times points. The points get crazy. And here you guys are with your gift cards, right? You can choose whatever you want. There's your 80. There's your 100. You can do what you want, right? We're just going to pay you guys out. Very simple. You call me. We have different redemption periods. I'll tell you how many points you guys have, and then you guys can redeem. We've had a couple of redemptions already. The thing was, the program was launched in February, so it's nice to see that we already have people that are getting gift cards, right? It's nice. Promos always happen with us. I told you the one that we have right now, 7.75 and 1.75% lender fee. You'll always catch promos with us. You'll see promos with us all the time. We have some brokers. I hope you guys are not the ones that just sit there and wait for our promos to come out and then they attack. You know what I mean? You can do that. I don't blame you. But again, everything is here for you guys. And I'm your live agent, so you can speak to me with anything. Do you guys have any questions? Anything to talk about?
Any questions, guys?
What do you mean? You like literally haven't asked one question yet today.
Among the newcomers.
If you can get back to
When
me.
you will explain
100%.
the
Send me an email. I'm sorry that you guys get me. I know I'm not the prettiest out of the three of us, but you guys can get, you can email me on the bottom here, and I will answer you guys in 10 to 15 minutes easily.
I'm gonna email you any
Okay.
clarification on the tiny home.
Perfect. I'm gonna get you clarification on that. Again, it's an absolute pleasure. I hope that I'm not gonna sit here and bore you anymore. I hope this is the start of many.
Thank you so much.
Right? I like to book maybe like biannual times that I can come in and just speak to you guys about current offerings, more lunch, more relationships. Then at the end of the day, we're friends, the business is gonna come.
Yeah.
Right? I'm not here to ask you, okay, give me a deal, no. It's just gonna come. Just know that I'm here. If you ever have a 5% chance, 5% thought that New Haven might work, give me a call. I'll tell you no right away. That's it. Okay? On that note, thank you very much. I very much appreciate it.
Thank you.
Okay, guys?
Great, guys.
Thank you, guys. I appreciate it. Thank you.
We have your number when I call.
Yes, sir. Call me. Call me, bro. Call me.
I always call in the meantime.
All right? And then for the big guns here, if we do enough